Good morning, everybody. I will be back in just a second. I'm going to grab some water. I'm going to leave the disclaimer up. Like the video, share it. Appreciate everybody tuning in this morning. I'll be back in just a couple seconds here. Alright, good morning, everybody. I don't want to do that. How's everybody doing today? What in the world? Oh, that's what I need to do. It doesn't matter. Alex, yeah, is it still in there? Jeez almighty, man. Disclaimers are just, because I edited, she pointed out yesterday, if there's another one, I clearly haven't read it. Yeah, it is what it is. It's a disclaimer. I have it in the description, so read it. Yeah. Thank you, Alex. I'll edit it tomorrow. Appreciate it, though. Everybody can see the chart. I'm pretty sure. Did I transition it? It looks like I did. Can everybody see my charts clearly? Yes. Okay. Perfect. Audio's good. Just give me a check on all that. Make sure we're good. Appreciate everybody tuning in. Hope you're having a good morning, afternoon, whatever it is, night. It is a good morning here in Chicagoland with 3 degrees weather and snowy. But looking at NASDAQ today, it is Friday. So we have to think in terms of what you would be looking for on a typical Friday, which, if you watched last night's video, I was explaining how there is a possibility of today being TGIF, which is a profile ICT teaches, which is thank God it's Friday, and that typically retraces back into the weekly range, 20 to 30%. Now, the high of the week could be set during this session and then retrace back 20 to 30% into its weekly range. So I'm curious to see what happens today. If y'all just caught that, was pretty wicked volatility right there for no reason. We have a news event driver at the silver bullet open. So anytime I have news event drivers, I'm typically waiting for them to unfold before I engage with the market. Sometimes I can engage with the market before the news event drivers play out. That's just depending on the criteria that's surrounding the day. So what I'm going to do is I'm looking at ES, YM, and NQ and dollar index. And what I want to do is just bring us all the way back out here before the open, because I'm in no rush today. As usual, I'm very rarely in a rush to do something, but let's go out to the higher time frame so we can gain a perspective on what we should be looking for today. So I've been following along with the daily logs, which I highly suggest you do, because those I'm teaching every single day in a recap what price did, what I went over on live stream, what we could have done better in hindsight, and then even what's going to happen the next day. So last night we were resting underneath the buy side liquidity. We ended up purging that, which was to be expected because we were so relatively close to it. Looking at today, and I'm looking in terms of really TGIF. That's, if I can get that today, that's really what I'm going to focus on, but we'll see what happens. So if you look at the weekly candle, typically we retrace back into the weekly range 20 to 30%. So if I take all of these away, let's say the high of the week is set here. It could be, since it's Friday, the high of the week could be set during this exact session. And then closing out, we could short into the 20 to 30%. It just depends on what really happens. But let's play, currently, that was the high of the week. It's already set. Then we would be looking to target 20 to 30% of what the weekly range is already done. And if you can do that, that's a really beautiful TGIF template, and it's a really easy model going into the end of the week. Sometimes TGIF is not available and it simply expands to close out the week. So it depends on the week that you're having and the days that you've had. You have to pay attention to that and the variables that are surrounding it, but that is a common characteristic that plays out on a Friday. So we've gotten above the buy side liquidity pool here, and if you pay attention to ES has done the same thing. While Dow is still not there yet, but it's good to see that they're back into sync with each other. If you go out to the daily time frame, we were talking about yesterday how Dow was fairly out of sync with ES and Q, and now it's starting to get back into sync. So you can see that they're all moving in sync with each other compared to yesterday in the morning session, how Dow was making a new low of the day while NQ and ES were all making new highs. So in a day like today where they're moving in sync, it's good to see. That's something you want to have in your setup. But what I see currently is NQ, ES. So ES hasn't purged this buy side liquidity pool. It purged a minor one. I'm curious to see if it's willing to get up above it today. If not, then this would basically be a SMT divergence, because even here, ES is getting above its high, and Q already did, while Dow hasn't. So going into Friday with the expectation of a TGIF template with a bearish SMT taking out buy side liquidity, it could set it up for a decent shorting opportunity. Looking at ES in here, you can see we got above the buy side liquidity there. On NQ, we've gotten above the buy side there, while YM has not. So in SMT divergences, two indexes are doing something completely different than one. So these both made higher highs while this made a lower high. That's an SMT divergence. It's a bearish SMT. Does it matter which one you pick? Not particularly, but one will be the weaker of the three. But particularly if you're sticking to one asset class, you're understanding it's a bearish SMT. And all it is a confluence that helps you read the market a little bit better. I'm constantly using SMT. It's something that is very, very helpful and useful to me. So we're about to open up here. And we dig down into some lower time frames. I just wanted to give that perspective so we understand where we're at. Does that make sense, everybody? Put a 1 in the chat. YM is Dow Jones. So what we're going to be doing is waiting for the silver bullet, because obviously that's the theme of the stream, but we have a news event driver right at 9 o'clock. So as I discussed, something like today, I would rather wait for that and see what we're looking like as we move into it. I just don't want to get caught trying to short this if we want to expand higher once more. So I'm going to try to delegate and navigate what we're trying to do. Dollar index is still really not being much support in here in terms of if it wants to move lower. If dollar index moves higher today, then we're really going to see a sell-off in NQ and ES and Dow. I am good, Pandy. Good to see you. Roosta, Harris, Brett, Zoe, Christian, Ron, Dwan. Good to see everybody in here today. Let me go down to lower time frames. Sorry. So you can see we're already having a pretty significant sell-off in here. It's good to see. Don't panic. Don't fear. Oh my gosh, I'm gonna miss a move. It's okay. I promise you. There's opportunities. So what I'm just observing during this opening range is there's some relative equal lows in here right there from overnight. So currently I'm just going to be looking if it wants to expand into the relative equal lows, which it looks like we probably are going to do that. And then let's do this as well. So regular trading hours, let's pop that on there. And then if you want the real void of it, so it's from the open here to the close. So this entire RTH gap, I talked about this yesterday in the daily log and even on the live stream yesterday. If you have a fairly large RTH gap, what I'm looking for is a retracement back into that RTH gap by 25 to 50%. It can close the whole thing in depending on the profile of the day. If it's extremely bearish, it will look to close that entire void in. If not, then I'm looking at 25 to 50% of it, the upper portion of it. So particularly these two levels here. And you saw that in the daily log last night. So what I'm going to do is leave that on there. I'm going to go back to electronic trading hours, and it's no longer there, right? Let's go out to a 5-minute time frame here, and I'm going to adjust this over in just a second. So I put those lines on there so I know exactly where price was. And then I can delete them. So inside of the 5-minute time frame, this right where the relative equal lows are, there's a reclaimed fair value gap in here. So I'm just going to mark that out, extend it to our right. No, you're not late, accidental. Good to see you here, my man. You know the vibes here. Very patient, very calm. We're waiting for the silver bullet. There is a news event driver at the silver bullet, so we'll wait and see what is happening by then. The template today is TGIF, so for those who are just tuning in, we may be looking for a retracement back into the weekly range depending on the criteria of today. Just so we're all on the same page. And you can see here, we took out buy side liquidity, we dropped lower. Doesn't automatically mean that that's a shift in market structure. Because if you look at a 15-minute time frame, make sure that this is only visible on a 5. If you look at the 15-minute structure, I'm going to have to move this over. We still have from this dealing range low to that high, so we're inside of a discount currently. You have to pay attention to your parent dealing ranges. So even though you're shifting on a 1 minute, that doesn't mean that you're automatically bearish. It can be, but on a 15-minute, a 30-minute, a 1 hour, we're still making new highs. So you have to pay attention to shifts in market structure and which parent you're inside of. But I wouldn't be surprised if these relative equal lows down here end up getting tagged. But this is the same thing as yesterday. Even though I can see that, I'm just going to wait for my rules and the criteria that I've set out for myself, which is waiting until the right time. That is what is off today. I don't have my music playing for myself, so. There we go. So what I'm doing is I'm just scanning a few time frames, seeing if there's any inefficiencies. There's one here on the 5-minute. This is really what the definition of tape reading would look like, is you're marking out certain inefficiencies, pools of liquidity, and you're just seeing if price is willing to react off of them, how it reacts, if it moves towards your draw on liquidity, and just reading price. There's no emotion involved on it. Especially if you're a newer student, it's really good to do this because you're not putting emotion behind something, and you're not, expecting the market to do something. You don't have an opinion on it. You're just simply neutral and just observing price. It's the best way to learn. You start putting emotion behind the markets and you start putting trades on and creating bad habits. You end up creating more problems and a mess for yourself than it's really needed. So what I'm doing is I'm kind of just marking out on higher time frames any discount areas, which are discount is a lower, anything underneath where current price is would be a discount. Would the 4:40 a.m. candle on the 5-minute be unicorn setup with the 5-minute FEG? 4:40. You may be referring to, this one here. The unicorn is such a funny term. Unicorn was originally the second stage of a market maker buy or sell model. And since then, it's kind of been skewed and portrayed in a lot of different ways since everybody's been educating, but originally that's the second stage of distribution or accumulation. And I don't see a market maker. I mean, this could be a market maker sell model. I know what market maker sell and buy models are. I'm very versed in them, but even as an educator, I don't really educate in that way. I say to just look for your model, because whether or not you know it, if you see your model, you're probably going to be participating in a market maker sell or buy model without even knowing it. So to me, it's not something that you need to directly know. It's a good thing to have, but everybody makes market maker sell or buy models a end all be all, that the holy grail. To me, it's really not that significant. Look for your model, look for your entry pattern, look for the draw on liquidity, and just keep it simple. And again, somebody's asked about exit. It's just pay attention to time, your draw on liquidity, your entry pattern, and that's all you need. You don't need to overcomplicate it. So pay attention to the RTH gap as well and how we're trading into that. And then I'm going to be looking at the divergences as well and correlation. Seems like ES is selling off pretty heavily in here. Are the relative equal lows you're talking about already purged? No. You can see this low down here. Now they're all relatively equal. Emmanuel, good to see you. Didn't ICT say once when the all-time high is broken, price will at least 500 points aside? I don't know if he particularly said that, but it just depends on the profile and what's happening. If you look at the sell-off from the open, what is this pattern here? We have a high, a low, a higher high, then a lower low. So what is this last down close candle? That's our bearish breaker. So you can see, utilize that bearish breaker to sell off into the discount areas down here. So we're digging up into this fair value gap there. And why would sells be, okay, this is a really good point I'm looking. If you have an SMT chart up, look at YM or Dow, look at ES, and look at NQ. So Dow is really selling off hard in here, same with ES, and NQ is moving higher. So you'll typically see a decoupled market sometimes right at the opening, and then it will move back into sync with each other. It won't always stay like that. Yesterday, for the most part, it stayed decoupled for a long period of time. But sometimes in the opening, you'll see this where they're kind of all out of sync with each other, and then you'll see by the end, or moving into Silver Bullet towards the end of New York, they're all back into sync with each other. So I don't love trading the opening range of it. I think the first 30-minute opening range can be very, very difficult to predict sometimes, and can be very manipulated, especially for a newer student. It's the reason why ICT says to put your focus on the Silver Bullet, because the first 30 minutes can be very wild. It's even for an experienced trader, it can be difficult to navigate. Yeah, if you can like the video, share it. I would appreciate it. That's all I ask. So we're coming off of this fair value gap in here. Look at a 1 minute. So that's where the 5 minute is. To refine it just to this small little 1 minute there. I'm not saying to go short or engage with the market. We're just tape reading currently until silver bullet comes. Shahir, Ali, good to hear, my friend. Very good. I'm very proud of people who've put a lot of focus in, or take away from me psychology and discipline. I think that's the main thing I try to emphasize here. Could you please describe what you're looking for to enter in the silver bullet? It just depends on what the criteria starts to unfold, you know, prior to silver bullet or during it. We've talked about in the beginning of the stream that we could see a TGIF template play out where you see a retracement back into the weekly range by 20 to 30%. But that's not always a guarantee. You may expand to close out the week. So I have to navigate and weigh decisions and see what's happening during that moment in time. Thoughts on trading macros? I think they're fantastic, but only trading them, I think you're kind of doing yourself a disservice. I think there's a lot of opportunities that happen outside of macros. Roberto F, fantastic. Thank you. Glad to hear that. So let's go back out to that 5 minutes so you know. So you have the fair value gap with the bear shorter block and the breaker, but just, if it's sold off, I have no fear. I don't know how else to explain it. I don't fear missing a move because it's not inside of the rules that I have set out for myself. So I can't fear missing something that's not a part of my rules. Does that make sense? Once you get to that point where you don't care what the market does because you know you have enough data and statistics to back the idea that even if we miss this short, if this was to go short, I know coming into silver bullet, there's probably going to be an opportunity. And what this also does is it protects me because I also know the first 30 minutes of the opening range, typically I get it wrong. So I like to wait those first 30 minutes because they are typically highly manipulated, and I can just wait for the silver bullet. I don't, take a trade in the first 30 minutes and I take a loss and I go into a silver bullet and I'm upset and I have all these emotions. I know myself so well that waiting this first 30 minutes, regardless of what's happening, protects me. It helps me. What are my tour rules? I don't know if that was a misspell. I mean, I have a lot of rules. I have a lot of rules. It's just, I can't explain it in one sitting. It's over a course of time that you'll see. Yeah, what are my rules? I mean, I have a lot of rules. So, you'll just see throughout streams and throughout logs and how I speak about price, what you'll catch on to what I'm, waiting for. And experience tells you the most. I mean, I have 6 years of experience that I lean on, and I lean on that idea that, all those years of experience are probably telling me something. Adele. Yeah, I think, I mean, I traded this strictly before. I mean, what you do in private comes out in public. So, I mean, if I was a maniac before all of this and trading like crazy, I mean, you would see it here. But I think trading live in front of people also does help me. I reviewed it in my own journal. I think that having accountability, hundreds of people watching, I mean, it does put a level of pressure, but I like pressure. Don't shy away from difficult tasks and things that put pressure on your shoulders. So you look at the 1 minute in here. So I'm just going to see, does it want to gravitate towards the sell side? And if it doesn't, I don't care. And if it does, I also don't care. I'm going to take away the hourly candle. I don't know why it's kind of bothering me today. So we have that sell side liquidity pool there. Reached up into a premium from this high down to this low. So basically right at optimal trade entry, which is 62 and 71, coupled with that fair value gap in there. How do you get out of that rush to enter a trade when you're a novice? Sometimes there's just no way to escape that. I mean, we all go through it. It's just you have to learn through pain and experience. I mean, it's the only way. If you keep touching a hot oven, a hot stove, over and over and over again, you're gonna learn that, you know what, I probably shouldn't do this. I probably should stop doing this because it hurts, and I'm sick of feeling this pain. I don't want to go through the pain anymore. You'll just come to that point where you're so sick and tired of doing the same mistakes over and over again, and you're tired of yourself doing that you stop doing it. If that makes sense. You can see in here, this is why I wait the first 30 minutes, especially before a news event driver. I don't want to be a part of this. I don't want to be, back and forth. Okay, we were in profit, back to break even, in profit. I would rather just sit and wait. I mean, then if you never learn, then you'll never be successful. That's the cold hard truth. You have two options. You either stop doing it, you become successful, or you don't stop doing it, and you never become successful. So use fear to motivate you. So I'm curious to see after the release of this. I don't know for a fact. If these were relatively equal and they were super clean, then I would be pretty keen on the idea that we'd probably run for that buy side liquidity. So what would make me want to target the buy side liquidity? Well, if we shift above this fair value gap in here and above this old high, we may want to target the buy side liquidity. You have to remember, we're still extremely bullish on the higher time frames. So that's the reason why I'm also not trying to short this, is because you have to remember the narrative, what's happening on higher time frames. We're extremely bullish. So you're trying to fight a trend, and I'm not trying to do that. I'm not trying to counter the narrative. I'm trying to stick within the narrative. The only reason I'd be willing to go short today is if the TGIF template set up, which would be against the narrative, but it's also a template for the day. I would have been stopped out by now. Yeah, I mean, I'm sure I would have too. That's the reason why I didn't take it. Yes, sir. I think we broke 400 yesterday, so I got to 400. I know that, but if we can consistently keep doing it, it'd be amazing. Welcome all the new viewers. I really appreciate it. It's been a blessing. I'm very, very, very pleased. So look at the 1 hour now, and pay attention in about 5 minutes how we close, because we drop down into a discount. Today's goal is 500, yeah. So I don't know what people are saying. Why didn't I take it? I'm not taking any trades. I think I've thoroughly have discussed that. Just because I mark up a certain area does not mean I'm taking the trade. Please use your brains. Please. You have to remember this week I've only taken one trade so far. So if I can take one more, if there's an opportunity today, I don't have to. I could be done with the week. And that's it. But if there's opportunity that I see as a viable option, then I'll take it, and that will be the last trade of the week. So look at the higher time frames. We're still extremely bullish. So even though TGIF is a template, we may want to set a new high of the week, and then it could retrace 20 to 30% and back into the weekly range. It's also never a guarantee that it's going to do that. It could just simply expand and close out the week extremely bullish. Alright, so let's dig down in some lower time frames here. Look at the 30-minute, the way we're closing in here. So we're still inside of that bullish dealing range I've talked about. Just from this low to that high, we dropped down into a discount. And we're also extremely bullish overall, so trying to short is a little bit lower probability to me. Luis, awesome here, brother. Yeah, I hope YouTube does recommend this to a lot more people. Inferno, I mean, as long as you know that your model repeats, it's fine. I mean, if you are constantly missing moves, then maybe go in and refine it and see what you could do better to maybe position yourself in the market. So let's look at the 1 minute here. We have about 3 minutes until the silver bullet and when this news event driver releases. That's another reason why I'm not really trying to take anything currently. I'm waiting for that to play out. So if you look down here, this last up close candle is a rejection block. So if you look at the open, we drop down into that. Rejection blocks are difficult. They're very difficult to learn. It took me a long time, probably up until last year, to really see them and understand them. Luis, sorry, my friend, my bad. I just quickly look at the chat, so. Yeah, Arista, rejection blocks are not an easy concept to learn, but if you look at the phenomenon of basically the last up close candle or the last down close candle in a series of a price and the way price will react off of it, it does do it a lot. I don't know if my mod's here with me today. Justin, are you here? Are you on stream? Yeah, I mean, I don't mean to be rude. Don't put in caps, are we bullish or bearish? And I mean, Just listen to the stream, man. So the news event driver has released. That's exactly why I wouldn't want to be shorting in there. So, again, learning how to not take losses and what not to take is very, very crucial. So we had buy side liquidity ran here. That closure is a little wild. We'll see. If this thing moves higher, forms a fair value gap in the direction of this buy side, then I'd be willing to go long into it. You see we drop down into a bullish order block, displaced higher. Rejection block down here. Yeah, the breaker could still be valid because technically it's all of these last down close candles. And if you look at the bottom of the closures, if this thing starts to drift off lower, then I may be willing to short it as well. So it just depends on the criteria and what it's giving me. Alright, so if we close above this order block in here, we'll see. So we didn't close above it. Yeah, Marco, I mean it's a little sloppy, but I think we'll clear up here. So I believe we're going to target this buy side here. Yeah, flat wound, that's kind of my idea today. If you can hear me, I'm not talking as much because I'm trying to actually focus. So there's nothing in here yet that I would particularly like to take a long off of. There's no confirmation yet. Even though I would favor that idea, there's nothing in here to get me into the market. There's a huge distinction between predicting where price could go, and then your entry pattern would have to form in order to confirm that. But for me, there's nothing in here to confirm that. So let's say this thing dropped off lower, then I would have to see if there was a short entry, because I could also see the sell side being ran. Yeah, Marco, I mean, last 2 days London session has really ran significantly, so it can put the AM in kind of a predicament, like opening range and moving into silver bullet. Thank you, Chris. I meant to mark that up. See, this is why I like to have chat. Remind me of things. So that's an inversion. It doesn't mean that I'm going to utilize that as an entry pattern. So if I was looking at the short, we took out internal buy-side liquidity. And if we have a decent displacement lower, leaving a fair value gap, I could target the sell side, and even some of the sell side down here. And the remaining portion of that RTH gap, which I have not forgotten. Yeah, so I believe we're going to probably target the sell side in here. So focus on the relative equal lows down here. So this level there. It may take it out without me being able to participate in it. So it just kind of is what it is. It's that bearish breaker in here. Look at the bodily closures of it. So I see a small inefficiency here. If price digs up into that before taking out sell side, then that would be probably where I'd want to short into or have a shorting opportunity. Let me look at some higher time frames. So more than likely, I would assume we're probably going to take out the sell side. before reaching into this, which is just part of rules and discipline. I can't just short. I can't just press a button because I see something. Discipline is a bitch sometimes, but it protects you, it helps you, and you have to follow it. So there's a 2 minute here. Why don't I drop to a 15-second chart? Because I don't trade the 15-second chart. I think you're gonna do yourself probably a lot more damage trying to trade the 15-second chart than you are just focusing on a 1 minute. So in here, I'd set my limit, let's say here, right at that 1 minute. So we're probably gonna get tagged into it here. My stop loss is gonna go above this high there. What in the world? And then I'm going to see if we get underneath the relative equal lows, how far it want to expand. If it does, we may get stopped out. I don't particularly know. And if I do, then it is what it is. So I'm probably going to be paying attention to the 2 minute more than the 1 minute. And it's going above that fair value gap. So in a sense, this is the 2022 model where we're taking out buy side liquidity. We've dropped lower. There's a shift in market structure, fair value gap, sell side liquidity to target. Also off of the idea of TGIF, retracing back 20-30% into the weekly range. So I think it's a fair assessment and a fair trade. If it doesn't work, it's just a transaction. My whole life's not over. I'm not a failed trader. Like, it's things you have to kind of tell yourself during a trade idea. So there's a this last up close candle can act as a bearish order block as well. And then we'd be looking for that sell side in here, and then the sell side liquidity down here. So if it gets underneath the sell side here, I'd probably take off a couple contracts, if it does. What? I have it on a live account, but I do it on paper trading just so you guys can see the positions where I'm putting my stop loss, take profit, etc. I guess I could move away the executions, labels. I mean, how many points is this in reality? I didn't really look in terms of how many handles. I mean, 25 handles. It's really nothing much. If I get stopped out, I mean, it is what it is. I'm probably done for the week. I'll still be up on the week, so I'm not gonna move my stop loss. I'm not gonna do anything. I'm paying it to be there, and if I get stopped out, then it is what it is. Which it looks like that's probably gonna happen. That's what trading looks like. And I may not get stopped out. I may run to my target, but let's say we do get stopped out. I mean, does it mean the model's flawed? Does it mean you're flawed? Nope. It just means you executed on a set of probabilities, and it's all that really you can do. So I don't like this. It's not favorable, to be honest with you. But I'm paying my stop loss to be there and do its job. You can see we came back down. We didn't completely close on the 15-minute. The bodies didn't close underneath this, and we're still in an overall bullish environment. So this week's been difficult. It's been tough, to be honest with you, to analyze and read and participate in moves. My stop position is really above this 2-minute fair value gap, because there's 3 candles that create a fair value gap, and your stop loss needs to go above the second, because it could wick above this and then close inside of it and drop off. So then I don't want to be wicked out of a position. I'm just scanning the time frame, just looking at price in general. But probably getting stopped out here in just a second. So there's that. I mean, if you feel some type of way about it, it's probably because you're over leveraged. I mean, how many trades have I taken this week? 2 trades, and that was half of the original win, so I'm still up on the week on paper. If I had to review the trade and be like, all right, well, why did I lose? Well, if we look at it, we're still overall bullish, right? And we're still inside of that bullish dealing range. We drop down back into this fair value gap in here. So we're trading back into this breaker. It's just a really sloppy range. Sorry it didn't go my way. Like, for less experienced people, it's not like taking a loss is not devastating as it may seem, at least to you. Like, to me, it means nothing. I mean, I wouldn't have done anything differently. Of course, in hindsight. So, per my rules, I will allow myself 2 trades in a session. If I take one loss and I allow myself to go back into the market with half the risk to take another trade if something seems deemable. If I just got it wrong, I read it wrong, then I can go back into the market with half the risk and see if I can get into the market again. Eric, just a lot of losses. There's a quote, I think the master has failed more times than you've even tried. I've probably taken 100 times more losses than you have. What would Inner Circle himself do? Well, I don't particularly know what he would have done. But I couldn't have seen it any other way in real time. So you can't beat yourself up over losses, man. Like, it's just part of the game. You have to. You're much like a boxer. Like, you're never going to like getting hit in the face, but you just become better at getting hit in the face. You become more comfortable with it. I don't like taking losses, nor do I like taking losses in front of hundreds of people. But it's a part of the process. I can't escape it. I can't run from it. You'll never ever be able to run from losses. So you have to get that fairy tale out of your mind. That does not exist. People say that to you. You'll hear it and be like, yeah, sure. But then you lose a trade and you're like, what the hell, man? It's like you didn't even expect it. It's like, how did you not expect that? Every time I go into a trade, I literally expect a loss. That way, when I do lose, I'm not like, oh man, I lost. I'm like, no, I expected that. Of course, I go with the intention of winning, but I also don't care. And you can see here, even if this thing dropped off into my sell side, I'm not going to be sitting here raging over it. It's just simply a set of probabilities. Pull yourself out of that tunnel vision where you're so focused on this one day, this one trade that's going to either make or break me as a trader. Pull yourself out of it. Remember, we have weeks, months, years. One trade does not determine who you are. I mean, there's just different ways you can put the perspective on it, chart trader. I mean, I like that quote as well. But I think if I go in with the intention of obviously winning and executing my model, but I also, if I expect a loss, then I'm not surprised. I'm not like, oh my goodness, I lost. It's like, oh, well, it is what it is. Move on to the next day. That's my mentality. I know what you're saying, though. And this is where most of the times I would blow up. It's right in this environment. After I took a loss, I took my stop loss right where, right where my stop loss was, a reversed. And it's going to move more towards my target. And I just start entering into the market. And I start over leveraging. I try to get my loss back. If you ever lose, get back into the market with no criteria, you over leverage and you win, that is a loss. That's a loss to you. That you're setting yourself back even further in time. Because now you're just building terrible habits. You may get lucky a few times, but I promise you eventually it's going to bite you in the ass. So you just have to be indifferent to losses and even wins. It's just a transaction. ICT I really like where if you take a loss, it's much like a flat tire. It's inconvenient. It's something you don't want to change. You don't want to go through that process. But even himself, he takes losses. So, mate, are you upset? Nope. I wonder how many people left the stream. I'm just curious. Or maybe we still have the same. Oh, we're still up there. So even in here, if I was super emotionally charged, I'd be looking to get back into the market in here. Full leverage, over trading, which this is just not a favorable condition. I mean, look at what we've done since the opening. We tried to go short in here. We tried to execute the model. That didn't work. I would need something very clear with evidence to get back into this market. Hoji, I'm neutral. If you notice the theme, I've taken a few losses on stream already. After I take a loss, I just chill out for a second. I just let myself digest the information, digest the loss, and then try to move back with a sober mind if there's anything on the table. That's good, Roost. I mean, if you look at like brick and mortar prop firms and people that are, you know, assessing a lot of capital and they're managing a lot of it, they're the people who are obviously overviewing their data and statistics. I was watching some guy's video. They're really happy when you have just like a very low losing month, and the way you're able to manage a losing month. Because if you're able to do that, it's more impressive than having extreme feats of wins. Because you could also have huge downfalls. I've worked with some investors that oversaw me, and they only really care about your drawdown. How far do you go into drawdown? How do you manage your drawdown? And if you can just make 1, 2, maybe 3% a month, they're very happy with that. But if you have 5% drawdown and you're only making 1, 2%, that's not impressive. But if you can have 1% drawdown and you're making 2, 3, 4% a month, that's extremely impressive. And you can have if you're losing months, only 1% drawdown. Again, that's you're managing risk very, very well. I think that's what I do extremely well. That sets me apart from a lot of people. And it's what you guys need to do as well, is this managing your risk extremely well, which is managing yourself. These ones are a little bit harder to see when I'm just reviewing this trade in my head. It's a little bit harder for me to see that loss in real time. What I'm comparing to is like yesterday, where it's just super sloppy. Like this whole opening range is easy for me to stay out of, but then we have this displacement lower, and I can't see that coming. So I don't think no matter how experienced you are, there's just going to be times where you simply can't see losses coming. And it is what it is. Koji Coolman, I have a problem that myself, I'd take it now and try to go back to the market. I mean, yeah, that's 90% of traders are revenge trading. But how would you do well in revenge trading in this type of condition? I mean, think about what I just said. I could have went short in here, probably getting stopped out again. Then I'd be trying to go long, might get stopped out again. By the time the session's over, I have 2, 3, 4, 5 losses. So we have about 30 minutes till the end of the silver bullet. We'll just see what plays out. Thank you, Justin. these type of weeks really mold you into a very good trader, because you're able to sit through a lot of low probability price action, and this is what it looks like. It's very boring. Why did I jump into a choppy market? Yeah, I should make a FAQ video, or maybe I could make a general post that I could have my moderator just keep posting. So this is what price action looks like when we're just chopping, doing nothing. I mean, overnight we expand a lot, which is typically a profile where if you expand a lot overnight, you can expect New York to be sloppy. But it's not always a guarantee, and it's the reason why I was leaning on the idea of possibly going lower today. It just didn't happen. Even if it's choppy, can you still trade inside the range? I mean, that's not, to me, that's not high probability. That's not, I don't even know if it's really that real or possibility of doing so. I mean, I don't know how you would be trading inside of this, personally. In hindsight, yeah, you could see, but. So Link Games, good to see you here. Appreciate it. Appreciate all the following. Yeah, I mean, there's always people who are newer and they don't know that you know, there's not always a trade, and it's difficult to maybe see that as a newer trader, or maybe what they're seeing and being taught. Yeah, Marco. But I mean, again, just because you rejected off of it and it looks like it's moving higher currently, doesn't mean that by the close of this whole down close candle could be down here. So, I mean, we could reject off of it, move higher. My idea and what I'm looking at, I'm going to probably stick on here for a little bit longer today just because it's Friday. This is the same feeling I have yesterday, where the AM session, that first probably hour, was super sloppy. And you're seeing we're engineering liquidity. There's a lot of sell side underneath here. So if we run higher, take out buy side liquidity, I would not be surprised if it drops it lower to take out the sell side eventually, much like yesterday. But I can't assume. Assumptions will get you killed in here. You can't just assume things. You can make predictions and obviously estimates as to where price will run to, but I can't assume that. Nothing's ever a guarantee. It's just something I'm analyzing. I mean, in hindsight, I'm just looking at this. I could have positioned myself in here and had my stop loss above this breaker, but that was a little bit too much risk for my liking, nor would I want to sit through this. So you can see we're just reclaiming this breaker in here, constantly referring back to it. Roberto? No, I actually don't. I've watched Reacher before, if that's what you're referring to, but no, that's just kind of my own little quote. I mean, look at YM, look at ES, they're all range bound, doing nothing. is super, super sloppy. Thank you, Wolf. Have a good weekend. I know it's late where you're at, so. In these type of conditions, I'm very happy if I only take one loss. Obviously, I would rather not take any losses, but if I can only take one loss inside of all this consolidation and chop, I'm very happy with that. Because my old self, like I mentioned before, I'm sure with a lot of you could be pressing a lot of buttons in here and doing a lot of different things. Yeah, they're all generally in sync with each other, but they're all just moving sideways, doing nothing. CJ, if you may, how the standard deviations work. Standard deviations, I guess there's two ways to applying that. I mean, there's an inverse dealing range that you can look for targets. So if I was shorting in here, you could look at this high down to this low, and you could use the standard deviations for targets and projections. So I can see -1 is down here, -1.5, -2. So you can use those as targets, but the actual dealing range is from that high down to this low. So you can actually use the current dealing range from this high down to the low, or you can use the, how do I put this, the previous run higher. It's a little bit hard to explain. I would just have to show with examples over and over again. Standard deviations to me are not that significant. I mean, if I can already see the draw on liquidity, where liquidity is, I don't need a standard deviation to tell me where it's going to go. It's maybe good to have, but the price is not reacting off of standard deviations. It's not. It's moving off of liquidity and inefficiencies. It's not moving off of your standard deviation tool. Yeah, I took that. Well, I actually took it on an evaluation. I'm doing because I'm getting my payout this week from my funded account, so I just haven't been trading on that. But I've had the 2 trades that I took have been on the evaluation, so I have another one going. It's the static account with my funded futures, because I think their static account is really, really, really good. It's a little expensive, but I can see the huge upside for it. Future static accounts are not that common, and I'm not a huge fan of the trailing drawdown. I think that can limit a successful trader, because if you want to build a drawdown and you want to be able to withdraw and then keep that drawdown, I think having a static drawdown is very key. Yeah, for my funded futures, it's only depends on which size you pick, but 6% and 8%. So a swing must be broken, and then you make the measurements. Yeah. Maybe 10.50 to 11.10. Yeah, the macro may push price to do something. And again, there's nothing else I would have done differently. Of course, in hindsight, I can say obviously I wouldn't want to have been in that trade, but that's all you could have done. You executed on the rules and things set out for you, and that's the key thing. Because if you don't execute on your rules and the things that you have set out for yourself, well, then when the right trade appears, and when it is actually a profitable trade, you're not going to execute on it. So you're still doing the same process that you would for a winning trade as you do a losing trade. It's the exact same process. So what I'm kind of reviewing in here is we're just constantly referring back to this breaker. We're building liquidity on both sides of the board. And if you want to review the actual trade in here, this was, if you look at my YouTube page, model number 2 it was an internal buy-side liquidity rate. So this was our dealing range prior to that trade. You had a low or high down to the low, moving up into a premium, taking out internal buy-side liquidity. So everything inside of that dealing range, right, everything inside of this high down to this low is internal liquidity. This would be external there and external here. So I have a model which is listed in model number 2, where you take out internal buy-side liquidity, you see a displacement lower, fair value gap to target sell side. So that was model number 2, and the reasoning why I was entering in that. You can see here we're having a displacement higher. I'm just not sold on anything. So look at the bodies of the 15-minute in here. Closures, just constantly wicking. CJ, how many entry models do you have and what's your preferred? I have 3 posted on my YouTube. I think I have probably one more that I utilize that I didn't put in the video, but it's fairly similar to the other ones. I mean, models by themselves, as I discussed before, they don't mean much. You need narrative, time, draws and liquidity. Yeah, there's a lot of chop, and it is what it is. If I was super emotionally charged right now, I'd be super upset about it. But, I mean, it's funny if you're ever talking to yourself alone and just screaming at your chart. I mean, the chart's not listening to you. The candlesticks aren't listening to you. You're literally just yelling at a monitor. Pixels on a screen. It's pretty funny. I mean, obviously I've done it thousands of times, just yelling at my monitor, but it's just funny when you do look at it in that perspective. You're just yelling at pixels on a screen. They do listen to me sometimes. Yeah, sometimes I'll be yelling at it to go up or down, and it does. So maybe they are listening. Can I know how much time there will be an impact due to red folder? Can you may have to reword that question. I don't know if you're asking. I mean, Forex Factory would tell you when the news event drivers release. In terms of how volatile, I mean, there's certain news event drivers that are more volatile than others, which would be CPI, FOMC, NFP. I lose my mind on that share, yeah. So it looks like what I just discussed probably about 10-15 minutes ago. Oh, thank you, Trading Unchained. That just depends. Sometimes I can enter 2 minutes after the news event driver releases. If everything's in line, I can enter off of it. But sometimes I may have to wait, like today. How long did we wait? From 9 o'clock. I waited about 8 minutes. So, I mean, when there's a new news event driver, don't be scared of it, because that's volatility. It's good. You want to see a lot of movement. But on like CPI, FOMC, NFP, I'd advise to kind of stay away from those. Definitely CPI and definitely FOMC. Alright, good, Marco. Yeah, I mean, my idea is they're probably going to run for the buy side here. I don't know that for a fact, but they would run for the buy side and it would be dropping lower. I don't know throughout probably the rest of the day because these lows have been engineered. If you look at yesterday's price feed and what we did was much like what I'm kind of seeing today, where a lot of chop in the morning, displaces higher, and then we drop off lower to take out the sell side. I'm just in Central Time, and it's what I'm accustomed to. I constantly try to advise people that I'm in Central Time. Please make sure you're in New York. So this is an example of this is going to be a little out there on technicals. This is an inverse breaker. So this is a little out there if you're newer. But this is an inverse breaker, potentially, where you're utilizing the old bearish breaker. We're utilizing this now as a potential bullish breaker area, or just a support level if you could look at it through that lens. Every single PD array that ICT has can be inversed. And that doesn't mean you should be doing that, because you will get yourself hurt trying to reverse everything. You have to know the right criteria and the right conditions to do so. But much like an inversion fair value gap, this would be an example of an inversion breaker. I mean, it could have been, but to me, I at that moment in time, I wasn't willing to go long in here. If you look at the 15-minute, it's a bigger breaker. How do you think about that relation to the 5-minute inversion? I'm not sure particularly what that means. You can see here on the 5-minute, this last down close candle. So currently, if I had to favor something, I'd be looking for higher prices into the buy side here. And if I can pick something off to get back into the market, then I will do so. So this will form a bullish order block there. So I'm going to go long in here because these last two down close candles are technically your bullish order block. I'm going to risk very minimum. And you can see my contract size is half of the position. It's underneath this low here. So if it trades through that, then I'm probably done. You see I'm probably risking very, very minimum. It's about 14 handles on the queue. And I'm probably going to get stopped out, so it is what it is. Really, I'm just trying to show the example of being inside of these conditions. If you wanted, you could move your stop loss beneath this 5-minute, but it's just too sloppy of conditions for me to really even trust that. So that's my 2 trades. And in total, we lost. And you can see I went half of what my previous position was. So in here, we lost how many handles? I'll just put the executions on. So we lost about 20 handles here. In hindsight, I could have put my stop loss down here, but these conditions are just making me very weary. About 30 handles in total. Is that you in the profile picture? Yeah, I believe so too, Roberto. But it is what it is. Is that you in the profile? Yes, it is. I forgot to answer that. It wouldn't be anybody else. That's funny. Short now? No, do not do that. So, my opinion, I was probably just a little too tight on the stop loss management. That is what it is. I'm not going to get back into the market and force anybody into any more trades. That's going to be it. I'm aware that I have a lot of viewers on here, and I'm not trying to do anything else. But I would still favor the buy side liquidity above this high here. Which year did you start learning ICT? Probably 2020, 2019. So I dug down into the mean threshold of that order block. I was just too tight on my management. Honestly, I'm quite fatigued from the week and live streaming, so it is what it is. I don't care. But that's how, to me, if you were able to take 2 losses in a session, you take 1 loss, and then you reverse, or the next trade you would have reduced risk. And it is what it is. You only watch charter content? I mean, I was a charter member. I started with his YouTube page, and then I got into his charter membership, and then from there I've studied him. Maddie, good to hear. Screen size looks good. Thank you, Trader Tom. I appreciate that. Hey, I appreciate it. That was actually for my my best friend. I was a best man about 2 months ago for his wedding, so I thought it was a good headshot. I think it's better to have a profile picture of what you look like rather than a logo. That way people can see what you look like and you're not just some robot. I would have a camera on, but I just find it unnecessary. Yeah, and you see how people are saying charter. I joined in his 2021 enrollment, so I mean I'm still in his group. I mean he's still talking. Even today he was talking to us. Do I think ICT is an AI? No. So in hindsight, I know that my stop loss management was quite poor. And that's what, in high resistance liquidity runs, you need to have your stop loss a little bit more open. So, because I still favor that buy side at 17,255. So, there's that. I mean, if that happened off stream, I don't want to get into another trade, particularly because of an audience. But if I know I had a bad stop loss management, I probably would have went long again, to be honest. And that would have been the final trade. Yeah, scroller, because before he got super popular, there was still leaked core content, and that's how I got introduced to it, was by a leaked course, and I started watching his videos through the leaked stuff, and then I went to his YouTube page, and then I signed up for his charter membership. Yeah, the hard part is to stop, and especially in these conditions. I mean, it's not favorable conditions. I'm not gonna push this, especially with everybody watching. It's not a good thing to do. Very high resistance, and if you're wondering what high resistance means, it's just a lot of back and forth movement in here compared to low resistance, where it's just a clear run to a drawn liquidity. It's really easy, but in here it's a lot of back and forth to move to a drawn liquidity. Yeah, so like next week my position would be, I'd still keep it at, so let's say I started with 6 contracts, right? That was my first initial risk. I'd go back in with 3, and since I lost again, I would still keep it at 3. As long as it depends on your risk, because you can lose 0.25% or 0.5% and still be fine for a long period of time. If you lower it too low, then it's going to take you way too long to build back those losses and that drawdown. As long as you know your strike rate and your win rate's high, then I would start with 1% and then move it to 0.5%, and then you can keep it at 0.5% for for however long it takes to build back. Roberto, good to hear. It's funny in these markets how, somebody could do terrible and somebody could do well, and view it in 2 completely different perspectives. I would like to know, you start your position at your intended position. Yeah, I mean, there's building in positions and building up contracts as you go. I think it's a little bit more risky and harder to do as a newer student. Even myself, I'm not particularly fond of doing it. I'd rather be positioned in where I want it, and I don't have to worry about trying to get into the market more than I need to. I think the more times you get into the market, the more times you're opening yourself up to more risk, right? I mean, that's pretty self-explanatory. Scroller, there is a video that ICT just posted, how to start ICT's, or how to join ICT's mentorship for free. If you're a newer student, you're brand new, I don't know where you're at, I would say to go to the 2022 playlist, and then probably the Market Maker Prime series. Core content can be extremely boring, but it is the language in which he teaches. So the core content is simply just a dictionary or something that allows you to understand what he's talking about, and then the other ones are him applying it. I'm using ES and Dow is SMT ES. Oh, didn't mean to do that. So this is terrible PA. I mean, yesterday, today, I mean, what was it? Tuesday we had a long for about 60 handles. Wednesday and Thursday I didn't take any trades, and then today we took 2 in here for a minimal amount of losses. So you have to also look at the amount of range that we're in. I mean, in total I think it was about 30 handles in loss. And on a good day, you can pull 100 handles out of NQ fairly easily. Yeah, core content is very, very boring. It's something that I hated going through, but we all have to do it. I think it's very, very useful in the end, because there's a lot of gems in there that you may not pick up on right away, but eventually you'll see that they're very useful. So even if I was still positioned long in here, this would be just a tough position to manage, because either I would have to sit through this and see if this is probably high resistance liquidity run, where it constantly just keeps referring back to PD arrays and areas of inefficiencies. It doesn't mean that you're wrong, it just means that it's going to constantly keep referring back to it. So yeah, I mean, everybody has different ways of learning, so it just depends what kind of captures your attention the most, I think. Oh, you deleted it. I was going to go off of that, but yeah, exactly, Roosta. I mean, that was the end of the silver bullet. So if you only trade the silver bullet, you're done. That's it. You just turn off the charts, walk away, and you're done for the day and for the week. The hardest part is ending the week with a loss, because you want to end the week off on a good note, so you feel good and you have all those good feelings. But believe it or not, if you try to do that, you're probably going to end up and you're digging yourself a bigger hole, to be honest with you. You can see here, I mean, this is just very high resistance. Like, it would have been very, very difficult to be successful in these conditions. I mean, you could have got a short long or a small long in here, scalp, but again, it's really nothing significant. I mean, look at the range that we're in. So I just want to stay on the stream to see if we can get up into the buy side, and if we do that, then at least I know that the analysis was correct and the management wasn't perfect. And that's what you need to put in your journal, what you could have done better. At least for me, that's what I will be doing. I got you, scroller. I mean, if you watch the core content, then I move on to 2022, move through some of his other playlists. I think going through his live streams of last year, even though it's not live anymore, it's still really, really useful. I think that's where a lot of learning will happen, is during his live streams of last year. I think that went over a lot of people's heads, because they were looking for signals, when in reality you should have been paying attention and learning. I mean, the midnight open, I'm not going to use that just as it can be a confluence, but I'm not going to just take that as a trade idea just because it hits a midnight level open. That's not enough confluence. Good, Riston. I'm sure that you have a very good understanding of price. Yeah, Scroller. I mean, all of the information is useful. Every single one. There's nothing that I mean, there's certain order that you can watch it in, but just dig into it all. Don't overthink it so much. Just start watching and start journaling. I mean, you guys have way more information than I ever had. I mean, we used to have to just dig through every single video, through 3-4 hour videos, just to, and he'll put the best gems at the end of the video. He purposely did that. He did not make this learning process, at least in the beginning, easy for anybody. And he stated that before. He does that for a particular reason. A lot of the times if you watch the end of his videos, he drops a lot of good gems in there. So, it's just the way he teaches. He's a very peculiar man. You can see, I mean, that is a clear example of high resistance liquidity run. What I was talking about, how you just constantly refer back to this down close candle. What I'm highlighting on the 1 minute is that 5 minute bullish order block. You can see the buy's respecting it. We just constantly keep referring back to it. So you have to have a lot more patience with high resistance liquidity runs and being very, just kind of babying it, being patient with it. Your stop loss management needs to be well, and that's just what I did incorrectly, obviously. So, and here, if I was entering off that bullish order block, I should have put it beneath at least the stealing range low to high there with that fair value gap, and I still would have been in the position. But again, we're human, we make mistakes. I'm not going to beat myself up. I know that I can come back and do things correctly. It doesn't mean that I'm going to continuously keep doing that in the future. It may just happen a one-time thing. So, and if you're cheerleading yourself, which is what I try to do the most throughout sessions and reviewing prices, well, even though we're stopped out there, at least I was able to see where price was going. So that's a pro. I can put that in my journal. I can cheerlead myself and say, you know what, even though my stop loss management wasn't great, I was still able to see where the draw on liquidity was, still able to get that correct. It was a tough session, and maybe in a better, easier environment, it would have been a heck of a lot easier to do so. I'm knowing ICT, I know I've seen him do it before, where if he entered off of this bullish order block, he would have moved his stop loss lower, and then he would have been constantly entering into these dips in here. I'm just knowing him. Well, that's where 30 years of experience pays. Trading on chain, love to hear that. Thank you. Did that on a demo. Fantastic. You're welcome. I just want to see the high get ran in here. So you can see there, yeah, the macro is very impressive. So from this time window, you can see the algorithm is spooling towards the draw on liquidity. And that was partially the reason why I did enter in the trade. But again, shit happens. If you look at Dow, there's some bullish SMT on the lower time frames. So if you're doing like it's called the six sister approach, where one is lagging behind the other. If you take a look at ES is not near its high like NQ is. So you could position yourself into ES if you wanted to go long in there. I'm not saying to do so, but I'm just saying from that stance and approach. So there's the buy side liquidity, targeted and ran. Again, we got that prediction right, but being right and wrong is not equaling to profitability. So even though you can be right on the draw on liquidity, you can be stopped out and be not profitable. Vice versa, you could be profitable and it doesn't reach your target. So right and wrong is a fallacy. Lazy, what's good, bro? To be honest with you, I'm pretty fatigued from this week. I'm very tired. This week has drained a lot out of me, especially live streaming. It's been a lot. That's something I knew even going into today. Like by the end of the week, I'm very fatigued. So you can see my risk management was not good, or at least not risk management, the stop loss management was not good. And sometimes when you're fatigued, you're tired, you don't do things correctly, and you can't beat yourself up. You're human, so it is what it is. So from here, I don't particularly have a bias. I'd be done for the day. We delivered our target, at least what I was looking for in the trade, so that's cool. I talked about the sell side. Just keep that in mind. If you move into PM session and you do trade that, just be aware of the sell side liquidity that's resting in here. But overall, I mean, we're still really bullish and expanding higher overall. I think that's going to be it for the stream and for the week, man. I don't have anything else to really provide, to be honest. Appreciate all tuning in, all the new followers, subscribers. Make sure to go over to Twitter at CJTrades_. Just go ahead and give me a follow. I appreciate it. And until next week or even this weekend, I might do a review, something like that. Good luck and good trading, everybody.